All right, welcome back. So we have talked about the support and resistance. We have talked about the market structures, and the forms of market structures are the trending market and the ranging market. We have talked about the uptrend, the trending market in two forms. It's either uptrend or downtrend, but the ranging market only picks a form. It goes sideways, it ranges sideways. And we have talked about how to trade the ranging market. The best way to trade the two best way to trade is you buy from the support and you sell from the resistance. That is, if a market is ranging this way, what you should do is mark out both the support and resistance, buy from here the support, sell at the resistance, and mind you, you will sell at the third touch. If you have ranged the first touch, second touch, third touch of the resistance is where you sell. Resistance is where you sell. And also on the third touch of the support is when you buy. Make sure, keep that to mind, and always remember this saying: once might be a mistake, the second time might be a coincidence, but the third time is definitely a pattern. And the second best way to trade the ranging market is wait for a breakout. Wait for a breakout is either to the upside down, to the lower down. Is either you wait for a breakout here, a breakout and a retest back, or probably the breakout is here and you have it to retest. I've explained that, and we are talking about the uptrend, which moves in the sequence of higher high, higher low, higher highs, higher lows, higher high, higher lows, higher lows, higher low, higher highs. I explained that too, and we understand everything leads to the concept of the support and resistance. We have the resistance above, we have the support below, resistance above, support below, and we have said it. This is the higher high, this is the higher low, this is the higher high. We have our higher low here. We have the higher high here. We have the higher low here. That has been explained as well. Right? That has been explained as well. And I've told you the best way and the best time to buy this market. In a uptrend, we are looking for just the opportunity to buy. And the best way to buy this market is when your resistance, which is the turning point upside down here, turns to support. That is, market have resisted to come back, so there's a support here. Understand? So when market is moving upside down, you thought probably the market will stop here again, but it breaks it. So once you see a breakout here, fine, just wait for a retest so that your resistance can turn support. It is here too, and that is how it is on the chart. After the board explanation, we will go to the chart to make some example for this class before we end this our 13 days class here. So now this is another one. Higher high, higher low, higher high, higher low. Once it's giving you the sequence of higher high, higher low, higher, definitely is an uptrend. It's giving you the sequence of higher high, higher low, higher high, higher low, higher low. I'll explain that too. And we're talking about the downtrend to be for the lower high, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower high, lower high. And just like every other thing, we have the support here, we have the resistance here. This is our lower high, this is the lower low, this is the lower low, this is the lower high here. Once it's giving you the sequence of a lower high, lower low, lower high, lower low, is a downtrend. It's a downtrend. And how to trade this properly is what we want to explain here. It's a downtrend. When it's giving you this is a downtrend, and what you look for in a downtrend is going down. The market is falling. That means all you need to look for is opportunity to sell. Opportunity to sell. And you sell when your support turn to resistance. There's a support here. That's clear. We have the support here. So when your support turn to resistance, the support is a resistance. So the market has support. The price is falling here. The market has supported it. So it pushes back, supports and pushes back. But there's something resisting it here. So when it's come back, you thought this support will edit again, but no, it's break out the support. Okay, fine. You have broken it. It's up to you. Just keep waiting for it to come back again. When is the back going up again? This support zone will not allow it again. So you pass through me the other time. You thought you will pass again. So you have to resist it. So you sell from here. And how to sell this kind of market, we wait for the pattern. We have the candlestick patterns that indicate that to us. We will explain that after this. And here too, probably after you have this, you sell for here too. So the support has turned to resistance. This is support here, actually here, and breaks and turn to resistance. After that being said, well, that's a summary of both the highs and lows. I think we have understand now. So let's talk about trendline strategy. The trendline strategy. The trend line, yes, trading strategy. Yeah, this place is long ahead. It's actually long for this place ahead. The trend line trading strategy. What is a trend line? What is it used for? Okay, the trend line is a line, just like we have the horizontal line. This is a line to determine dynamic support and resistance. This is the horizontal line. Let me just explain this very well. This is an horizontal line. This support level, this resistance level, this resistance level, this support level, this resistance level. Sorry. So when you connect them together, you are connecting with an horizontal line. This is an horizontal line. You are connecting with an horizontal line, and the horizontal line is, what is it doing? It's just for you to determine the resistance level, the support level. You understand? It's just for you to determine the resistance level, the support level. But for a trend line is not horizontal. It can be adjusted, and it is used to determine support and resistance on trending market. So the trend line is used only on trending market. Trend line. You can see trend and line. Before you can have the effect of a trend line, the market needs to be on a trending side. Before you can say a trend line is actually effective, the market must be on a trending side. The market must be trending to use the trend line. So trend line is basically used for the trending market. Is either uptrend or downtrend. And it's a powerful skills. After the support and resistance is another powerful skills you have to know, you have to learn. So now, this is a uptrend as an example. Let's use a uptrend for an example. This is an uptrend for an example. Okay. And like I said, this is support zones. These are the resistance above. These are the support below. That is support below. So the trend line is used to connect support or resistance in a trending market. For an uptrend, you connect your support. For the downtrend, you connect your resistance. You connect the support on the uptrend. So this is our uptrend now. We have to connect the support available. You understand? That is also called, you connect two pips and two troughs. So you connect. Okay, now from here now, this one support, you connect it. This can actually be drawn beautiful on the board. You connect it. This we call the trend line. You connect, like, it's a trending market and you use a line to connect them. is a trend line. Let me explain further now. So the best way to trade the trending market is on a third touch of a trend line. On the third touch of a trend line. Just like the already ranging market, you trade this also on a third touch of a trend line. You understand? On the third touch of a trend line. The ranging market too, on the third touch of the resistance or support is the best time to trade, right? I've explained that. So just as it here now. For example, we have an uptrending market. We have it this way. You already notice that we have two support already. So what you need to do is what? Have your trend line connect to these two. That's connected to these two. That's how to trade the market. You have connected your trend line to these two. Then you are waiting for the third touch. I'm telling you that the third touch have not happened. So you are waiting for the third touch of this market. So you are waiting for the price. And don't forget now, we have the support here. Remember this resistance. So you are waiting for the third touch. And number two thing you are waiting for is also this resistance has been broken here. This resistance has been broken here. But so you are putting a line here too to wait for it. Understand? You are putting a line here you are waiting for it to turn to support here. So when the market moves and comes back to this place, this is where you buy. And two things are telling you to buy here. Two good things. What is the first thing? The first thing is your trend line. You have the third touch. Like we said, the first time can be a mistake. Second time can be a coincidence, but the third time is a has turned to pattern. Anything that is doing a third time, probably you said you do something, it's a mistake, or you did the first time, they corrected you the second time, where's the coincidence here? I've not changed, don't worry. You did the third time again, Baba, this is your own pattern. Just follow it. This is your own pattern, you understand? So a third touch is a pattern, and after third touch, the pattern can continue. The pattern does not just stay one head, does not stay one. So pattern can continue. So after this, we can have these two. So when you buy here, probably you have this. You keep waiting for candlestick reactions to know the time to close this market, your buy. Then, your trend line will be adjusted again to the front. Sorry with this, my writing with this line. So now, we're expecting it to come back and touch it again. So yeah, you can buy again. And don't forget, this is what? This is a resistance zone. If you mark it together, that means you are waiting for a resistance that has been broken to come and test. It has broken it through low to come and test it to give you the support here. So that's two things is telling you what to do here now. The first one is the concept of the support and resistance zone. You have a resistance there that has been broken that you want it to come back to support, and you have a trend line there which has what identified 2 times that the market has held, first and second time. So on the third time you buy, the fourth time you buy. Anytime you keep buying on until this trend line is broken. Until this trend line is broken. And we will explain that. That means once you have if your trend line is broken, that means probably we want to have a change in structure. Probably from uptrend want to turn to downtrend. Probably downtrend want to turn to uptrend, or probably the market want to start ranging. Anything is possible. So only until when we have a change in structure, when we have a breakout of this trend line. It's only above until it can keep going, it can keep heading until there's a breakout. So it's for you to what? To know how to just keep making it when time is trending. And the trending market is very super. It's one of the best markets to trade. The trend is your friend. Let's go. Let's check it again. So to connect to draw a trend line, a valid trend line, to draw a valid trend line, you must have seen 2 points. That means 2 supports for an uptrend, or 2 resistance for a downtrend. 2 supports must have happened before you can call it a valid trend line. Here now, probably we have something here already before this market happens here. So we have this place, we have this part, first, second is already third. So what you do is to connect them together. If this place has not happened, I'm telling you, if this place has not happened, the total. So the first and second point is valid for you to connect. And don't forget, this is your resistance. So you also draw a line to be waiting for the price here at the support level. You wait for the price. You know, this is, you can see now, instead of having this resistance in a straight form, support in a straight form, the trend line is used to connect it dynamically, like in a dynamic form. It's also the concept of both resistance and support, but it's just in a dynamic form, because below here you have the support. Okay, for example, let's draw this line now. So what happened here is, now we have a resistance here, right? This here, there we have a resistance here. So you connect this resistance, and you have seen the market broken in. You don't drag with the market. Congratulations, bro. You have broken this zone. Okay, so you mark out this zone. That means you are waiting here for two things. You are waiting for it to come and touch the trend line so that you can buy, because it has done it here one, it has done here two, it has done here two. So you are waiting for it to come here. That's number one. Number two, you are waiting for your resistance to turn to support. So two things are telling you to do same thing here. That means we are trying to build our strategy right now. We are trying to build our conferences, our strategy right now. In forex trading, two is very nice for my mentor now. He uses 3 to 4 things more, telling him to do something before he can actually do it. That doesn't mean you will not lose. So even if 5 things is telling you to do something, you will still lose. But at least it gives you the high hedge. It gives you a high probability setup than having just I think the market will buy. No, you don't think the market will buy. You have seen, let the market keep giving you action. You just react to it. Two things. So now when the market comes back here now, the best time to look for buy. Start looking for buy opportunity. So you buy it to the upside and make your money. Let's give an example with the downtrend as well now. Example with the downtrend market. So this is a downtrend market. Don't forget, this is a downtrend market, is moving. And what are you looking for in a downtrend? Is opportunity to sell. His market is falling already, so let's just look for opportunity to join it. Let's say that's why trend is your friend. You are not forcing it. You are not telling the market, oh yeah, please now come and sell. No, it's not our business. It's already selling. It's already falling. And if it's buying on the uptrend, we also buy with this. We don't drag. We are not the makers of the market, so you don't drag the market. You don't force the market to do things. You just react to what the market is already doing. So now what you do here is, you have the resistance here, you resist the resistance here, the resistance here, resistance here, resistance here, resistance here. And we have the support below here. So to have a valid trend line here, you connect two resistance points. It's also called the, like I said, they are called the peaks and trough. But you get to understand that later. You can just use it like connecting two resistance. You are connecting two lower high. Understand? You are connecting two lower highs. Here, you are connecting two lower highs here. The first, the second. So the first, the second, you sell on the third. The first one might be a mistake, the second one might be probably a coincidence, but the third one is a pattern. It's already going to being a pattern. You understand? You sell on the third one. You make your sell trade on the third one. So this is the example here now. So now, since you have once you have 2 points, 2 resistance points here, 2 turning points above here, it's already a valid trade. So this is how you do it. Once you have 2, it's already a valid trade. And don't forget, these are your support zones. So you are waiting for a third touch of this trend line. The third touch of it. Come and touch it the third time and let me see. So now what happens there is, don't forget there's a support here. And when support turns to resistance is when we sell. So you also mark your support zone here. and keep waiting for the market to come back. So when the the market comes back, that it retraces back, you sell. That's when they give us our impulse move. Don't forget, this is an impulse move. The retracement will actually be shorter. You can see we have the impulse here, we have the retracement. You have the impulse here, you have the retracement, impulse here, we have the retracement. So upon the retracement, so you keep waiting for it. Upon the retracement is when you do what? When you sell, when you take your own action after the retracement. And how will you know this retracement is done? Firstly, we have your trend line here. Once it does not break above the trend line. Also, we have your support here. And we will go to candlestick. We will explain the candlestick you have to see here. Probably when you move here, you can see strong, the candlesticks that are very strong that are going. Also here, you can probably see some strong ones, but when you get to that line, you can see them having wicks, rejecting, like you can see them having this. We will explain that to you and you will know how to identify it when it's time for candlestick. When it's time to talk about candlestick, we do that, we explain that. So this is what you need to understand about trend line. That's the concept of a trend line. It works on a trending market. Is that an uptrend or a downtrend? It works on trending markets. Trend line is used on trending markets. And to have a valid trend line, to make a trend line your strategy, your setup, to have a valid trend line, you have to connect two supports in the uptrend, two resistance in the downtrend. You have to connect them together to have a valid trend line. Let's give another sample of here again. So once you have it here, you have two values. All you need to do is just connect them, waiting for the third touch, and also connect your zone, which is your support zone. So you are expecting a resistance here, because all of these are resistance. And don't forget, these are already higher low, higher low. You can see what I'm writing, sir. It's lower high, sorry. Lower low, lower lows. So market can keep going here. You don't know when it will test yet. Wait for your own third touch. You have to wait. Be patient. And probably this might already be a third touch. Probably somewhere here. No, we don't know what happened here. Somewhere here might actually give you. But this, we are talking about this in a valid way now. Don't because this market is going. You jump on it. You might make profit and you might lose your account, but you must have a plan. Like, until I have a third touch before we had, that keeps you in the winning side for long. That doesn't mean you will not lose. Even you can have 5 things telling you to buy, 5 things telling you to sell, and you will still lose. That's what the market is built of. But yet, the edges of winning will be high when you follow a great plan. So now what happens? Just wait for this retracement. Upon the retracement, we have the third touch of a trend line. What is telling you to do? We have the trend line third touch. Third touch of a trend line. And also, we have the support. Turn to resistance. It's a support turn to resistance. So what you do, you sell downward. And also, when you sell, probably you get to this place before you come back, it's fine. You also wait for the market again on this trend line. On this trend line again. And wait for it on the trend line again, this is our support again. You have already connected it to, like, you are expecting it. So that's the concept of a trend line. To have a valid trend line, it does not matter the time frame. You can take it on 15 minutes. You can take it on 1 hour. You can take it on 4 hours. If time permits us, we talk about the time frames, and if not, we go on with that during the mentorship program, probably when we have another opportunity to speak with ourselves this way. So that's the concept of a trend line. Let me just recap a little bit. The concept of a trend line. To have a valid trend line, you have to connect two. You have to connect two. After 2 is connected, you wait for it here. And you have to connect your support and resistance zone as well before you can buy. You don't buy here. After the connection of the 2, you are waiting for the third time to tell you, yes, this is truly a pattern. Yes, this market is truly going up. Understand? And In this scenario we explained just now, when you are waiting for it, when you have your support, the market can break it. Is normal. That is the market. You don't control the market. You don't know what the market will do. Even not the trend line. But the trend line, yeah, there are things that have worked over time. There are things that people have tested and trusted, and it will keep working. Because it breaks, it does not mean the trend line does not work. You will still connect the trend line here for a downtrend. You understand? So, and for the uptrend, which I will explain, and that is for the uptrend, and for the downtrend, please. Once you have to connect them, look for your resistance zone here, because you have a support here. So look for a resistance here, mark it. So anytime the price come back to retest it is when you sell. You sell. You now have a support broken. This support is broken again, mark it again. You come back again, you sell again. I hope we understand that. That is it about trend line. You connect two. You must connect two. If you are looking for, if you have noticed the market is going to sell, is a downtrend, you connect two resistance upside, and you are connecting it from left to right. Connect these two, not that you draw it from here. You connect these two first and second. And for uptrend, for an uptrending market, you connect it from here to here. So you wait for it to come back. You have a resistance here turn to support, and you have a trend line here. A touch of a trend line makes it a valid trade. That is 2 out of about 4 things we are looking for to make it a valid trend line. I hope that is clear. If you have your question, please let me know. And I think that is clear enough. We will go to the live chat. I will make a video about live chat soon, so you can get the concept very clearly on the chat. But now you must at least have it in mind. How is it draw? How is it this and this thing? And we have the PDF for this, which is the trend line trading strategy. And also the second part of the trend line strategy is talking about the breakout. If it breaks it, when you will know if the trend line is no longer valid. You understand? That is the market. We don't control the market. Because I know trend line. Trend line, anything can fail you. But when it fails you is when we come to the risk part of your market. There's risk management. There's a way you manage your risk. When you are coming to forex trading, you know there is risk. You think there's no risk in every business. You are going to sell rice, to sell raw food going in this country, there is risk. Custom, everything can hold you. Petrol increase can just happen anytime. Accidents can even hold the car on the way. Can even hold the bus that I want to deliver to you. A lot of things. Every business has a risk in life. But forex trading is something you know your risk before you go into. What happens to a raw food? The risk you don't know. Example of what happened in a polytechnic just last week. The food sellers have cooked. They believe the school will operate as usual. Then the protest happen. What happens? Most of them had to bring the food outside. Most of them had to even dash people out. Most of them had to sell it because protest happen and the school gate is locked. And people that have prepared food, is that not a risk? That is a risk-free day, and they don't even know. You don't prepare for the risk. But in forex trading, you prepare for your risk. You know there will be risk. You know you can lose money. Even waking up per day as a forex trader, all you have to ask yourself is, how much do I want to lose today? Okay, I can lose $50 today. Okay, let me use this $50 to $500. You understand? Any day you don't feel like risking any amount, that will probably affect your psychology. You don't trade, because the market is designed for you to lose first before you can earn money. You will lose. Like losing is something that is what you don't have a choice for. But when you understand it very well, your winning days will be higher than your losing days, and that is a goal. But we'll explain that as time goes on.